Alright, before we dive in, let's get the important legal stuff out of the way. I am not a licensed financial advisor or an insurance agent. This presentation is for educational and informational purposes only. The information provided is based on my own research and experience, but you should always do your own research and consult with a qualified professional before making any financial or insurance decisions. Your situation is unique, and this video is not a substitute for personalized advice. Now imagine this. You're 2 weeks into the backpacking trip of a lifetime across Southeast Asia. You've saved for years, you've planned every detail. You decide to rent a scooter to explore the coast of Thailand. Sun on your face, wind in your hair. It's perfect, until it's not. A dog runs into the road, you swerve, and the next thing you know you're lying on the pavement with a bone-deep searing pain in your leg. Your leg is shattered. You're rushed to a small local hospital where no one speaks much English. They stabilize you, but the doctor makes it clear, you need complex surgery and they can't do it here. You need to be flown to a major hospital in Bangkok immediately. As you're lying there, in pain and terrified, the hospital administrator hands you a bill for the initial treatment and the ambulance. It's $5,000, and they want it now. Then they tell you the medical flight to Bangkok will be another $20,000. And the surgery itself? $50,000, maybe $60,000. They ask for your insurance. You confidently hand them your American health insurance card, the one that costs you hundreds of dollars a month back home. The administrator looks at it, confused, and hands it back. "We don't take this," she says. "You must pay now." In that moment, your dream vacation transforms into your worst financial nightmare. This isn't a scare tactic. This exact scenario, or something terrifyingly similar, happens to thousands of Americans every single year. And it happens because of one of the biggest, most expensive misunderstandings in the world of travel: the difference between trip insurance and travel medical insurance. Most people think they're the same thing. Or they think the travel protection they clicked on when they bought their plane ticket has them covered. Or they believe their premium credit card is a magic shield against any disaster. I am here to tell you, in most cases they are catastrophically wrong. And that misunderstanding can lead to financial ruin, forcing you to drain your life savings, sell your home, or declare bankruptcy, all because of one unlucky moment in a foreign country. The entire purpose of this video is to fix that. We are going to permanently erase the confusion. By the time you're done watching this, you will understand the critical difference between these two types of insurance with absolute clarity. You will know exactly what your U.S. health insurance does, and more importantly, what it doesn't do the second you leave the United States. You will know how to read between the lines of a policy, what questions to ask, and how to ensure you, your money, and your family are completely protected. This isn't just about saving your vacation. This is about saving your financial future. So let's start with the hard truth for every American watching this. Your domestic health insurance plan, whether it's from your employer, the marketplace, Blue Cross, Aetna, Cigna, it doesn't matter, is almost completely useless outside the borders of the United States. Let me say that again. The moment you are on foreign soil, you are effectively uninsured from a major medical standpoint. Medicare? Forget it. With extremely rare exceptions, Medicare provides zero coverage overseas. Your gold-plated PPO plan? Maybe it will cover a tiny fraction of out-of-network emergency services, but you will have to pay the entire bill up front. We're talking tens or hundreds of thousands of dollars, and then fight your insurance company for months, maybe years, to get a sliver of it back. They will be looking for any reason to deny your claim. The global healthcare system does not work like the American system. In many countries, if you can't pay, you don't get treated. It's that simple. They will demand payment up front before a major procedure, or in some cases, will literally hold your passport until the bill is paid in full. A medical evacuation, which is just a fancy term for an ambulance in the sky, can easily cost over $100,000. If you're in a remote area and need to be flown back to the US with a medical team, you could be looking at $250,000. That's a house in some parts of the country. This is where the great confusion begins. People hear travel insurance, and they think it covers everything. So let's draw a very clear line in the sand. First, let's talk about what most people think they have. Trip cancellation and interruption insurance. This is the most common type. This is what your credit card probably offers. This is the little checkbox you see on Expedia or airline websites. Let's call this vacation investment insurance. Its primary job is to protect the money you spent on the trip before you go, or if your trip is cut short. Its focus is on reimbursing you for your non-refundable payments and deposits. Think of it this way. You and your spouse book a $10,000 anniversary cruise to Alaska. A week before you're set to sail, your father has a heart attack and you have to cancel. Trip cancellation insurance would swoop in and refund you that $10,000 for your cruise, your flights, and your prepaid excursions. Or let's say you're on that cruise and halfway through you get a call that there's a family emergency back home and you have to fly back immediately. Trip interruption insurance would cover the cost of that last-minute, one-way flight home and reimburse you for the unused portion of your cruise. It also covers things like lost luggage or significant travel delays. It protects your investment. It protects the cost of the trip itself. It is incredibly valuable for that purpose. But here's the critical part. Its medical coverage is usually an afterthought. It's often very low, maybe $5,000 or $10,000, sometimes $25,000. That might be enough to cover a visit to a clinic for a stomach bug. But it's not even a down payment on a serious medical emergency. It is a band-aid for a bullet wound. Relying on this for a major medical event is like bringing a squirt gun to a wildfire. Now let's talk about the other side of the coin, the one most people ignore. Travel medical insurance. This is not about protecting your $10,000 cruise. This is about protecting your $10 million life. Let's call this life and savings insurance. Its primary and often sole purpose is to cover your medical expenses if you get sick or injured while traveling abroad. It functions like your health insurance back home, but it works internationally. The coverage limits here aren't $10,000 or $20,000. They are $100,000, $500,000, $1 million or more. Let's go back to our scooter accident in Thailand. If you had trip cancellation insurance, it would do absolutely nothing for you while you're lying in that hospital bed. Your trip wasn't canceled. It just took a horrifying turn. But if you had a real travel medical insurance policy, you would make one phone call to their 24/7 assistance line. And from that moment on, everything changes. They would coordinate with the doctors. They would guarantee payment to the local hospital so you get immediate care. They would arrange and pay for the medical flight to the state-of-the-art hospital in Bangkok. They would cover the surgery, the hospital stay, the rehabilitation. And most importantly, if your injury was severe enough that you needed to be flown back to the United States on a specialized medical transport with doctors and nurses on board, it would cover that too. That $250,000 flight? Covered. All of it. Instead of facing a lifetime of debt, you pay your deductible. So, do you see the difference? Trip insurance protects your vacation dollars. Travel medical insurance protects your entire net worth. One is about convenience, the other is about survival. One handles lost bags, the other handles shattered bones. And thinking one can do the job of the other is the single most dangerous gamble you can take when you travel. So let's start with the one you probably think you know. Trip insurance. This is the one you see offered as a little checkbox when you're booking a flight on Expedia or a cruise online. Seems simple enough. For an extra $100, you get peace of mind. But what are you actually buying? Let's paint a picture. Imagine a family from Ohio. Let's call them the Millers. For years, they've been saving for the trip of a lifetime. 2 weeks in a rented villa in Tuscany. They've scrimped and saved, planned every detail. They paid $10,000 for the villa, non-refundable. Another $4,000 on non-refundable airfare. They've booked train tickets, museum tours, a cooking class. All told, they're in for about $17,000 paid up front, for a dream that's still 3 months away. Then 2 weeks before they're supposed to leave, Mrs. Miller's father has a serious fall. He's going to be okay, but he's broken his hip. He needs surgery and round-the-clock care for the foreseeable future. There is simply no way they can go to Italy. The trip is off. Now comes the second wave of devastation, the financial one. They call the airline. The best they can offer is a flight credit, which sounds okay, until you realize it expires in a year and can only be used by the same travelers, and there's a hefty change fee. The villa in Tuscany? They call the owner. He's sympathetic, truly, but it's high season. He can't refund their $10,000 this close to the date. The train tickets, the museum passes, all gone. That $17,000 dream has evaporated, and the money is just gone. A black hole in their savings account. This exact, soul-crushing scenario is the reason trip insurance exists. It's not about the little things. It's about protecting the big, non-refundable investments you make in your travel. At its core, trip insurance is financial protection for your prepaid trip costs. It revolves around 3 main pillars: cancellation, interruption, and delay. Let's start with the big one, trip cancellation. This is what would have saved the Millers. If they had a standard trip insurance policy, The sudden, serious illness of a close family member is almost always a covered reason for cancellation. They would file a claim, provide the doctor's documentation, and the insurance company would reimburse them for all of their non-refundable, prepaid expenses. The 10 grand for the villa, the 4 grand for the flights, the museum tickets, all of it. They get their $17,000 back. The financial disaster is completely averted. Now the key phrase here is covered reason. This is where people get tripped up. You can't just cancel because you changed your mind, or because the weather forecast looks a little rainy. The reason has to be unforeseen and listed in the policy. What are these reasons? Besides a medical emergency for you, your traveling companion, or a close family member, they typically include things like your own unexpected job loss, being called for jury duty, your house becoming uninhabitable due to a fire or flood, or a death in the family. It's for major, life-altering events that make travel impossible or unreasonable. The second pillar is trip interruption. This is different from cancellation. Interruption happens when you are already on your trip, and you have to cut it short. Let's imagine the Millers made it to Italy. They're a week into their dream vacation, sipping wine and enjoying the Tuscan sun. Then they get a call from their neighbor back in Ohio. A pipe burst in their basement. It's a catastrophic flood. They have to go home right now. Trip interruption coverage does two incredible things here. First, it will pay for the cost of a last-minute, one-way flight home, which, as we all know, can be insanely expensive. Second, and this is crucial, it will reimburse them for the unused portion of their trip. They paid for 2 weeks at the villa but only used 1. They get the value of that second week back. They had a train trip to Florence booked for the next day that they'll now miss. They get that money back. It protects you from losing money on the parts of the trip you never got to experience. The third pillar is trip delay. This is a much more common, though less dramatic, scenario. You're at JFK, ready to fly to London, but a massive thunderstorm grounds all flights for 18 hours. You're stuck. Your flight won't leave until tomorrow afternoon. Trip delay coverage is designed for this. After a certain number of hours, usually 6 to 12, it kicks in. It will reimburse you for a hotel room near the airport, for your meals while you wait, for a taxi to and from the hotel. It turns a miserable, expensive ordeal into a manageable inconvenience. It won't make the flight leave any sooner, but it will keep you from sleeping on the airport floor and paying hundreds of dollars out of pocket just to get through the delay. And of course, there are the benefits everyone thinks of first: baggage. Lost luggage coverage reimburses you for the value of your belongings if the airline permanently loses your bag. Baggage delay coverage gives you a daily allowance to buy essentials, a change of clothes, toiletries, a phone charger. If your bag is just delayed for more than a specified time, say 12 or 24 hours, these are nice, helpful perks, but in the grand scheme of things, they are small potatoes. The real trip-saving power of this insurance lies in protecting that massive $17,000 investment from cancellation or interruption. So what's the catch? The biggest catch is understanding what is not covered. As I said, changing your mind isn't covered. A breakup with your travel partner isn't covered. Your boss denying your vacation request that you never got approved in the first place is not covered. It has to be an unforeseen event as defined by the policy. This is where the ultimate upgrade comes in. The Cancel for Any Reason or CFR add-on. This is a premium feature that you have to buy shortly after your initial trip deposit, usually within 14 to 21 days. And it costs more, typically about 40 to 50% more than a standard policy. But it does exactly what it says. It lets you cancel your trip for literally any reason under the sun: fear, anxiety, a sick pet, you just don't feel like going anymore, and get a substantial portion of your money back. It's not a full refund. Most CFAR policies reimburse you for 75% of your non-refundable costs. But for someone planning an incredibly expensive, once-in-a-lifetime trip, or someone who has a volatile work schedule or family situation, that 75% back for a no-questions-asked cancellation can be the ultimate safety net. It transforms the policy from a shield against defined disasters into a tool for maximum flexibility. So, that is trip insurance in a nutshell. It's a financial product. It has nothing to do with your health. It doesn't care if you break your leg. It only cares if that broken leg forces you to cancel your flight. It's designed to protect the money you spent before you travel. It's about hotels, airfare, and tours. It's about getting your investment back when life throws you a curveball. But what happens when that curveball isn't just a flooded basement back home? What happens when that curveball is a scooter accident on the cobblestone streets of Rome? What happens when you're looking at a foreign hospital ceiling, listening to doctors speak a language you don't understand with no idea how you're going to pay for any of it. That's when you realize that protecting your $17,000 vacation fund is one thing, but protecting yourself from a $500,000 medical bill is something else entirely. So let's talk about that $500,000 bill. Where does a number like that even come from? Sounds like an exaggeration, a scare tactic. But it's not. Let's break down the anatomy of a true travel disaster. The initial ambulance ride from the ski slope to the local clinic? That could be $1,000. The emergency surgery to set your leg with plates and screws in a Swiss private hospital? You're easily looking at $30,000 to $50,000 right there. A week-long stay in that hospital for recovery and observation? That's another $20,000. But that's not the big one. That's not the number that financially ruins people. The number that changes your life forever is the cost of getting home. The doctors in Switzerland say your injury is too severe to fly on a commercial airline. The risk of blood clots at that altitude, the inability to keep your leg properly elevated, the lack of immediate medical care if something goes wrong. It's a non-starter. You need a medical evacuation. You need an air ambulance. That means a private jet, retrofitted with a medical bed, staffed with a flight nurse and a doctor, cleared for an emergency international flight path. The cost for a flight like that from Europe back to the United States can range from $100,000 to over $250,000. Add it all up and suddenly that $500,000 figure doesn't seem so crazy anymore. It's terrifyingly real. This is the entire reason travel medical insurance exists. This is its entire purpose for being. It's not about your vacation. It's about your life and your life savings. Think of it this way. Trip cancellation insurance protects the money you've already spent. Travel medical insurance protects all the money you have and all the money you ever hope to earn. The two are fundamentally different. A robust travel medical policy is designed to be your primary health insurance the moment you step outside the United States. And its core components are built around these catastrophic, high-cost scenarios. The first and most obvious is emergency medical coverage. This is what pays for the doctor, the surgery, the hospital stay, the x-rays, the prescription drugs. Policies will have different limits, maybe $50,000, $100,000, $500,000, or even $1 million in coverage. This is the part that handles the immediate crisis on the ground. But the second component is the game changer. It's called emergency medical evacuation. This is the line item in the policy that pays for that private medical jet. It covers the cost of getting you from a place with inadequate medical care to a place that can properly treat you. That might mean flying you from a small island in the Caribbean to a major hospital in Miami. It might mean flying you from a remote village in Peru to Lima. Or it might mean flying you all the way from that hospital in Switzerland back to your home hospital in Chicago. This coverage alone is often worth the entire price of the policy 10 times over. Without it, you're faced with an impossible choice. Risk substandard care where you are, or take on a debt so massive it could follow you for the rest of your life. There are other benefits too, things we don't like to think about. Repatriation of remains, for example, which covers the significant costs of transporting a person's body back home if they pass away while traveling. There's also often an accidental death and dismemberment component, which pays a lump sum to you or your family in the event of a tragic accident. These are grim subjects, but they are practical realities of what can go wrong far from home. Now, the single biggest question, the number one point of confusion for Americans is this: don't I already have health insurance? I pay a fortune for my Blue Cross Blue Shield plan every month. I'm covered, right? For the vast majority of American travelers, the answer is a shocking, dangerous, and resounding no. Let's be crystal clear. Your domestic U.S. health insurance plan is designed to work inside the United States. That's its network. That's its system. Most plans, especially HMOs and many PPOs, provide absolutely zero coverage outside of U.S. borders. If you break your leg in the Alps, your Cigna card is about as useful as a library card. They will not pay. End of story. Some PPO plans might claim to offer some out-of-network or emergency international coverage. But if you dig into the fine print, you'll find it's a minefield. They might require you to pay the entire bill up front, all $50,000 for that surgery, and then submit a mountain of foreign language paperwork to maybe get reimbursed months later at a much lower out-of-network rate. They will almost certainly not cover a medical evacuation. You'll be on your own for that $250,000 flight. And for anyone over 65 traveling on Medicare, the situation is even more stark. Medicare offers absolutely no coverage outside of the United States, period. There are a few incredibly rare technical exceptions involving Canada or Mexico, but for 99.9% of international trips to Europe to Asia to South America, your Medicare card is completely worthless for medical care. You are 100% on your own. Relying on Medicare for an international trip is the equivalent of traveling with no insurance at all. This is why a dedicated travel medical policy is not a luxury. It's a fundamental necessity. It's designed to fill this massive, dangerous gap that your domestic insurance leaves wide open. It's designed to work with foreign hospitals to pay them directly to handle the logistics and, most importantly, to authorize and pay for an evacuation when it's medically necessary. Okay, so you understand the need. But then comes the next big worry. The fine print. The gotcha. What about pre-existing conditions? Let's say you have a history of heart disease, or you take medication for high blood pressure, or you had a knee replacement 2 years ago. You're thinking, they're just going to use that as an excuse to deny my claim, right? This is one of the most misunderstood parts of travel insurance, and getting it right is crucial. Most policies have what's called a look-back period. This is typically a 60 to 180-day window before you buy the policy. If your pre-existing condition was stable during that time, meaning you haven't had new symptoms, new medications, new treatments, or a change in your doctor's orders, then you are generally covered for an unforeseen, acute flare-up of that condition. But there's an even better way. A secret weapon. It's called the Pre-Existing Medical Condition Exclusion Waiver. This is an add-on or a feature of many comprehensive plans that waives the pre-existing condition exclusion entirely. It means that as long as you are medically cleared to travel by your doctor when you buy the policy, you can be covered for issues related to that condition. But here's the critical part, the part most people miss. To be eligible for this waiver, you almost always have to buy your insurance policy within a very specific time frame, usually 14 to 21 days from the date you made your first trip payment. That could be your flight, your cruise deposit, or your tour booking. If you wait a month to buy your policy, you've likely lost the option to get this waiver. It's a powerful incentive to get your insurance sorted out right at the beginning of your trip planning. So now you've done it. You've bought a great travel medical policy with high limits, medical evacuation, and a pre-existing condition waiver. You've protected your health. You've safeguarded yourself against a catastrophic, life-altering medical bill that could bankrupt you. You're covered if you get dengue fever in Thailand, or get into a car accident in Italy, or break a leg in the Alps. You're set, right? Your well-being is secure. Well, what about the $17,000 you already paid for that trip? The non-refundable flights, the safari lodge, the guided tours? The medical policy covers your body, but it does absolutely nothing to protect your wallet from the cost of the trip itself if you have to cancel before you even leave your house. What if your appendix bursts the day before your flight? Your travel medical policy won't help you then. What if your mother has a stroke and you need to stay home to care for her? What if your tour operator goes bankrupt? That's an entirely different kind of risk, and it requires an entirely different kind of protection. This protection isn't primarily about your body, it's about your wallet. It's called trip insurance, or more accurately, trip protection insurance, and its fundamental purpose is to safeguard the financial investment you've made in your journey. Let's picture a scenario. Meet the Millers. For their 25th wedding anniversary, they planned the trip of a lifetime. 2 weeks in Italy. For 3 years they saved every spare dollar. They booked non-refundable flights to Rome, prepaid for a charming villa in Tuscany, and put down a hefty deposit on a private cooking class overlooking Florence. The total cost, paid out over months, came to $14,000. It was their dream fully paid for, just 6 weeks away. They were ecstatic. Then the unthinkable happened. It wasn't a medical emergency. Mark Miller's company, a major tech firm, announced a massive round of layoffs. His entire division was eliminated. Suddenly, with no income and a future filled with uncertainty, spending 2 weeks sipping wine in Italy went from being a dream to a financial nightmare. They had to cancel. Their hearts sank as they called the airline, the villa rental company, the tour operator. The answer was the same everywhere. "We're sorry, but your booking is non-refundable." That $14,000? Poof, gone. A devastating financial loss on top of an already stressful situation. Except for the Millers, it wasn't gone. Because when they booked their trip, they spent a few hundred extra dollars on a comprehensive trip insurance policy. This is the absolute core of what trip insurance does. It's built around two powerful concepts: trip cancellation and trip interruption. Let's start with trip cancellation, which is what saved the Millers. This benefit reimburses you for your prepaid, Non-refundable travel costs if you have to cancel your trip before you leave, for a specific covered reason. And that phrase, covered reason, is the most important one in the world of trip insurance. Losing your job like Mark did is almost always a covered reason, as long as you've been with the company for a certain period, usually a year or more. The Millers filed a claim, submitted the paperwork from Mark's company, and within a few weeks, they received a check that reimbursed them for every single non-refundable dollar they had spent. The flights, the villa, the cooking class, all of it. Their financial catastrophe was averted. But job loss is just one of many potential covered reasons. What else is on that list? It's a long one. The unexpected sickness, injury, or death of you, a traveling companion, or a close family member back home is a huge one. This is where trip insurance and travel medical can overlap, but the key difference is whose health we're talking about. Remember our example from the last section? If your elderly mother has a stroke a week before your trip to Spain, your travel medical policy does nothing for you. But your trip cancellation insurance kicks in. You can cancel the trip to stay home and care for her, and get your money back for those non-refundable flights and hotels. What else? If your house becomes uninhabitable due to a fire, a flood, or a natural disaster, covered. If you're called for jury duty or subpoenaed as a witness in a trial, covered. If a terrorist incident occurs in a city on your itinerary within a certain time frame of your arrival, say 30 days, that's usually a covered reason. A documented theft of your passports or visas right before you leave, covered. If the airline, cruise line, or tour operator you booked with completely ceases operations due to financial default, covered. Think about that last one. You book a once-in-a-lifetime Alaskan cruise, and the cruise line goes bankrupt a month before you sail. Without trip insurance, your money is just gone. With it, you're protected. So, trip cancellation is your shield before you go. But what happens if disaster strikes while you're already on your vacation? That's where its equally important sibling, trip interruption, comes in. Imagine you're finally in Paris. You've just finished a croissant, you're walking along the Seine, and your phone rings. It's your sister. Your father has had a massive heart attack and is in the ICU. You need to come home. Now, you drop everything. You rush to the airport. A last-minute, one-way ticket from Paris to Chicago is going to cost you a fortune. We're talking $2,000 or more. And what about the 5 remaining nights in your prepaid Parisian hotel? What about the high-speed train tickets you bought to visit Lyon? What about the guided tour of the Louvre you paid for? That money is all down the drain. This is Trip Interruption's moment to shine. Does 2 critical things. First, it reimburses you for the unused, non-refundable portions of your trip, so you get your money back for those 5 hotel nights and those train tickets. Second, and this is crucial, it covers the cost of that exorbitant last-minute one-way ticket to get you home. It takes a situation that is already emotionally devastating and prevents it from becoming a financial gut punch as well. The covered reasons for trip interruption are generally the same as for trip cancellation. A sudden illness or death back home, your house flooding, a terrorist attack at your destination. It's protection for the same kinds of problems, just with different timing. Now, beyond these 2 heavy hitters, a good comprehensive trip insurance policy includes a suite of other incredibly valuable benefits that handle the common, infuriating headaches of modern travel. Let's talk about travel delay. We've all been there. You're at the airport, and the dreaded announcement comes over the PA system. Your flight is delayed 6 hours due to a mechanical issue. Then it's 12 hours. Now you're going to miss your connection, and you're stranded in Dallas overnight. The travel delay benefit is designed for exactly this. After a specified delay, usually 6 to 12 hours, the policy starts to reimburse you for reasonable expenses. That means the meal you had to buy at the airport TGI Fridays, the hotel room you had to book near the airport, the taxi to get there, the essential toiletries you had to buy because your checked bag is in limbo. It doesn't erase the frustration, but it means the inconvenience doesn't cost you an extra $300 out of pocket. And what about that checked bag? That leads us to baggage and personal effects coverage. There is no feeling quite like the slow, dawning horror of being the last person standing at an empty baggage carousel. Your bag is gone. Or more commonly, it's just delayed. It went to London while you went to Lisbon. Baggage delay coverage gives you money to buy essential items while you wait for your bag to catch up to you. A change of clothes, a toothbrush, contact lens solution. It gives you a budget, say up to $500, to get what you need to continue your trip without wearing the same clothes for 3 straight days. If the bag is declared officially lost, stolen, or damaged, That's when baggage loss coverage kicks in. It pays you for the value of your bag and its contents, up to the policy limit. It won't replace sentimental items, but it gives you the cash to replace your suits, shoes, and everything else you have to now buy new. So let's put it all together. Travel medical insurance protects your health. Trip insurance protects your money. It's the financial safety net for the non-refundable investment you made in your trip, covering you for specific unforeseen events that can happen before you go or while you're away. It's for the job loss, the sick parent, the airline strike, the flooded basement, the missed connection, the lost suitcase. It's an incredibly powerful tool, but it has one major limitation we've hinted at, that all-important list of covered reasons. All of these benefits, cancellation, interruption, delay, they only work if your reason for using them is specifically named in the policy document. But what if it's not? What if you need to cancel for a reason that isn't on that pre-approved list? What if your dog gets sick? What if you and your travel partner have a massive fight and break up? What if you're just too scared to travel because of a growing sense of unease about world events? Standard trip insurance says, sorry, you're out of luck. But there is a way to protect yourself even from that. A special premium upgrade that breaks all the rules and gives you the ultimate freedom to back out. And understanding how that works is the key to becoming a true travel insurance master. This ultimate escape hatch, this golden ticket out of a trip you no longer want to take, is called cancel for any reason coverage, or as it's known in the industry, CFAR. And it does exactly what it says on the tin. You can cancel your trip for absolutely any reason under the sun and get a significant chunk of your money back. Your reason doesn't have to be on some pre-approved list. It doesn't have to be logical. It doesn't have to be documented with a doctor's note or a death certificate. It can be a bad feeling, a gut instinct, a fight with your travel partner, a work project you can't bear to miss. Your dog sitter could cancel. You could just wake up one morning and decide you'd rather stay home and repaint your living room. With cancel for any reason, the why doesn't matter. All that matters is that you decided not to go. This is the nuclear option of trip protection. Think about it. You've booked that once-in-a-lifetime 2-week romantic getaway to Italy. You've spent months planning, paid for the flights, the charming villa in Tuscany, the cooking classes, the non-refundable train tickets. It's a $10,000 investment in your relationship. Then 2 weeks before you're supposed to leave, you have a massive relationship-ending fight. The trip is off. You call your standard trip insurance provider and say, I need to cancel my trip, my partner and I broke up. They're going to say, we're very sorry to hear that. But a breakup is not a covered reason. Your claim is denied. You are now out $10,000 and you're single. That's a bad day. But if you had the cancel for any reason upgrade, you make the same call. You say, I need to cancel. They ask why. You say, it's personal. And that's it. The conversation is over. A check is on its way. Or imagine another scenario. You're a high performer at your job. You've booked a dream trip to Japan to see the cherry blossoms. It's non-refundable. You booked it a year ago. A week before you leave, your CEO walks into your office and offers you the lead on a career-defining project. It's not mandatory. You can still go on your trip. But you know deep down that acing this project could mean a promotion, a huge raise, and a corner office. Standard insurance won't help you here. Canceling for a work opportunity isn't a covered reason. But CFAR lets you make the smart career move without flushing thousands of dollars down the drain. It even covers vague, unquantifiable fears. Let's say there's some minor political unrest in your destination country. It's not enough for the US State Department to issue a formal travel warning, so your standard policy won't kick in. But you've seen the news. You're feeling uneasy. You just don't think you'll be able to relax and enjoy yourself. Your gut is screaming at you not to get on that plane. CFAR honors your gut instinct. It gives you the power to say, you know what? I'm not comfortable with this, and not be penalized for it. Now this sounds almost too good to be true, right? A get-out-of-jail-free card for any trip? And you're right to be skeptical. This incredible flexibility comes with a very strict set of rules. And if you don't follow these rules to the letter, this coverage is completely worthless. This is where people get tripped up, so listen closely. First, cancel for any reason is always an optional upgrade. It's not included in a standard comprehensive plan. You have to specifically choose it and pay extra for it. And it's not cheap. A CFAR upgrade will typically increase the price of your insurance policy by 40 to 60%. So if a standard policy is $300, A policy with CFAR might be closer to $500. You're paying a premium for premium flexibility. Second, and this is the most important rule of all, you cannot wait to buy it. You must purchase your travel insurance policy with the CFAR upgrade within a very short window after making your very first payment on the trip. This window is usually between 10 and 21 days. I want to repeat that. You have to buy it within about 2 weeks of the first time you spend any money on your trip, whether that's putting down a deposit on a cruise or paying for your flights. You can't book a trip in January, get a bad feeling in June, and then try to buy a CFAR policy. It's too late. The insurance company needs you to place your bet when the future is still uncertain for everyone. It's like trying to buy fire insurance when you can already smell smoke from down the hall. They're not going to sell it to you. Third, you have to insure 100% of your prepaid, non-refundable trip costs. You can't lowball the estimate. If your total non-refundable investment is $5,000, you have to insure the full $5,000. You can't just insure the $2,000 flight portion and then expect to get money back for the whole trip. You have to be all in. Fourth, you can't cancel at the absolute last second. Most CFAR policies require you to cancel your trip no later than 48 hours before your scheduled departure. Some might go up to 72 hours. You can't wake up the morning of your flight, see it's raining, and decide to cancel. The decision has to be made with at least 2 full days to spare. And finally, the fifth and most misunderstood rule. Cancel for any reason does not reimburse you for 100% of your loss. This is the big trade-off. In exchange for letting you cancel for literally any reason, the insurance company asks you to share a small part of the loss. Most CFAR policies will reimburse you for either 50% or 75% of your non-refundable trip cost. Now, at first that might sound like a bad deal. What do you mean I only get 75% back? I want all my money back. But let's think this through. Go back to that $10,000 Italy trip. Without CFAR, you break up with your partner and you lose the full $10,000. That's 100% loss. With a 75% CFAR policy, you cancel the trip, and you get a check for $7,500. You've only lost $2,500. Which scenario would you rather be in? Losing 10 grand or losing 2,500? It's not about getting all your money back. It's about turning a catastrophic financial loss into a manageable one. It's a safety net, not a trampoline. So who is this for? Is this expensive upgrade worth it for everyone? Absolutely not. If you're booking a cheap, last-minute flight to visit your parents, CFAR is total overkill. If your main concerns are medical emergencies or hurricanes, a standard comprehensive plan is probably all you need. But if you are planning a big, expensive, once-in-a-lifetime trip far in advance, a honeymoon, an African safari, a multi-week European cruise, a family reunion that you're paying for, these are perfect candidates for CFAR. If you have a job with unpredictable demands, or you're a freelancer whose income can fluctuate wildly, CFAR is a smart move. If you're caring for an elderly parent or even a beloved pet whose health is fragile, CFAR gives you the peace of mind to plan a trip knowing you can stay home if you're needed, without losing your entire investment. And if you're just generally an anxious person who worries about things, CFAR can be worth every penny just for the psychological comfort of knowing you have an exit strategy. It transforms travel planning from a nerve-wracking gamble into a calculated decision. You're no longer just hoping that nothing in your life changes between the day you book and the day you leave. You're buying the power to adapt, the freedom to change your mind. So now you're a master of cancellation. You know how to protect your investment before you even pack your bags. But what happens when you're thousands of miles from home and everything that can go wrong does go wrong? Your flight is canceled, your bags are lost, and a volcano just erupted, stranding you in paradise. This is where your insurance policy transforms from a financial shield into a real-life rescue service. And the benefits that kick in are some of the most misunderstood and most powerful parts of any plan. Let's start with the most immediate problem. You're stuck. The airport is a chaotic mess of canceled flights, the local hotels are filling up fast, and you don't speak the language fluently. The first thing you do is not panic. The first thing you do is pull out your policy document, find the 24/7 assistance number, and make the call. This is your lifeline. This is mission control. People think of insurance companies as these faceless entities you only deal with when you file a claim after the fact. But with travel insurance, the best providers are an active partner in your crisis. The person on the other end of that line isn't just a call center agent. They're a logistics expert whose entire job is to solve the exact problem you're facing. They have access to resources you don't. They can see flight availability across multiple airlines, they have relationships with local hotels, and they can start coordinating your next steps while you're still trying to figure out where to get a bottle of water. They will tell you exactly what your policy covers in this situation and what you need to do to make a claim. This assistance service is by itself worth its weight in gold. Now let's talk money. The first benefit that kicks in is almost always trip delay. Think of this as your financial first aid kit. The volcano has closed the airport for at least 24 hours. Your flight is officially massively delayed. The trip delay benefit is designed to cover your reasonable, additional expenses during this waiting period. What does that mean? It means your hotel room for the extra nights. It means your meals, breakfast, lunch, and dinner. It might even cover some essential toiletries or a change of clothes if your luggage is checked and inaccessible. But here's the critical part. This benefit isn't a blank check. It has specific limits, and you need to understand them. Your policy will state a per-day limit, say $200 per person, and a maximum overall limit, perhaps $1,500. It also has a trigger. The delay has to be for a certain number of hours, usually 6, 8, or 12 hours, before the benefit even activates. So if your flight is only delayed by 4 hours, you're not likely covered. But in our volcano scenario, you've easily cleared that hurdle. The key to making this work is simple. Keep every single receipt. The receipt for the hotel, the receipt for the taxi to get there, the receipt for your sandwich and coffee. Without receipts, you have no proof of your expenses, and your claim will almost certainly be denied. Treat those little slips of paper like cash. So for 2 days you're covered. You have a safe place to stay, you're eating, and you're not burning through your emergency cash. This is the trip delay benefit doing its job perfectly. But then you get the news. The ash cloud is worse than they thought. The airport won't reopen for at least a week. Your 10-day dream vacation is effectively over on day 3. This is no longer a simple delay. This is a trip interruption. And this is where the real power of a comprehensive plan shows itself. Trip interruption is a fundamentally different and more robust benefit than trip delay. Its purpose is not just to keep you comfortable while you wait. Its purpose is to make you financially whole for the trip you lost and to get you home. Let's break that down. First, making you whole for the trip you lost. You prepaid for your entire 10-day trip. That includes 7 more nights at that beautiful resort, which are non-refundable. It includes the private island hopping tour you booked for day 5 and the deep-sea fishing excursion on day 7. All of it, prepaid and non-refundable. Trip interruption aims to reimburse you for the total cost of all the unused portions of your trip. The insurance company will look at your itinerary, calculate the value of the 7 days you're missing, and pay you back for them. This can be thousands or even tens of thousands of dollars. But that's only half of the equation. And frankly, it's the less important half in a crisis. The second part of the trip interruption benefit is what saves the day. It covers the additional transportation costs to get you home. Your original return ticket for next week is now completely useless. When the airport finally reopens, there will be a mad scramble for seats, and airlines will be charging astronomical prices for last-minute, one-way tickets. A ticket that might have cost $600 as part of your round-trip package could now cost $2,500 or more. Trip interruption covers that difference. It pays for that expensive, one-way ticket to get you from your point of interruption back to your home city. This is a critical distinction many people miss. They think, oh, I'll just use my original ticket later. You can't. The airline's contract of carriage is fulfilled if they eventually fly that route, but that doesn't help you when you need to get home now. Your policy steps in to bridge that gap. It's also crucial to understand that trip interruption, just like trip cancellation, only applies for covered reasons listed in your policy. A volcano eruption is a classic example of a covered reason. So is a major weather event like a hurricane, a terrorist attack at your destination, or you yourself suffering a serious illness or injury mid-trip. This is also a good moment to clarify the difference between trip cancellation and trip interruption. It's simple. Trip cancellation covers you before your trip begins. Trip interruption covers you after you have already departed. If the volcano had erupted the day before you left, you would have filed a trip cancellation claim. Because it erupted while you were already there, it's a trip interruption claim. Now, this same logic applies to other, smaller-scale travel nightmares. Let's talk about missed connection coverage. Imagine you're flying from Chicago to Rome, with a layover in Frankfurt. Your Chicago flight is delayed due to a mechanical issue, and you land in Frankfurt just in time to see your connecting flight to Rome pulling away from the gate. The next flight isn't until tomorrow morning. Your entire itinerary is now off by a day. Missed connection coverage is like a mini interruption policy. It will kick in to cover your hotel in Frankfurt, your meals, and most importantly, the cost to catch up to your trip, like booking a new flight to Rome to rejoin your tour group or catch your cruise ship at its next port. And while we're on the topic of being stranded, let's briefly touch on a more extreme benefit you might see in higher-end plans: political or security evacuation. This is for when the reason you're stranded isn't a natural disaster, but a man-made one. A civil uprising, a military coup, or a government-issued evacuation order for U.S. citizens. In these terrifying situations, this benefit won't just pay for a flight. It will arrange for your transport, by whatever means necessary, to the nearest place of safety and then eventually get you home. This is true rescue service level coverage. What all of these benefits, trip delay, trip interruption, missed connection, and evacuation, have in common is that they are designed to solve problems on the ground in real time. They recognize that when disaster strikes, your problems are not just financial, they are logistical and deeply stressful. Having a plan with these strong post-departure benefits means you have an expert team on your side, working to protect both your safety and your wallet. So, the volcano has ruined your vacation, and your insurance is handling the financial fallout and the logistics of getting you home. It's a lifesaver. But what if the emergency isn't where you are? But back home, what if you're on day 2 of your perfect trip, and you get that dreaded call from the United States? A call that a parent has had a heart attack, or your child has been in a serious accident, and you have to drop everything, abandon your trip, and get back immediately, no matter the cost or the complexity. That's a totally different kind of interruption, with its own set of rules and its own powerful, often misunderstood solutions. This is where trip insurance evolves from a simple financial safety net into your own personal, global-scale emergency response team. Let's start with the scenario we just touched on. The emergency isn't with you, it's back home. You're 2 weeks into a month-long European adventure. You get a call. Your parent has had a heart attack. Your house has been severely damaged in a storm. A close family member has passed away. In that moment, your trip is over. Not because you want it to be, but because it has to be. Your only thought is, I need to get home. Now. So you pull up an airline app and look for the next flight out of Rome back to Chicago. And your heart sinks. A last-minute, one-way international ticket isn't a few $100s. It's $2,000. Maybe more. And you have to pay it. On top of that, you're now forfeiting the money you spent on that train to Venice, that hotel in Florence, that guided tour of the Vatican. It's all gone. This is the classic trip interruption claim. It's designed for exactly this. You buy that expensive one-way ticket, you get home to your family, and you file a claim. The policy is designed to reimburse you for 2 things. First, the prepaid, non-refundable costs of the parts of the trip you didn't get to take. The hotels, the tours, the train tickets. Second, it covers the additional, reasonable transportation costs to get you home from where you had to abandon your trip. It makes you financially whole in a moment of personal crisis. But what if the emergency isn't back home? What if the crisis is happening right where you are? What if the person who needs to be rescued is you? This is where we move beyond simple reimbursement and into the most powerful, life-altering benefits that these policies contain. To understand this, I want you to imagine a traveler. Let's call him Mark. Mark is 28 and he's saved up for 2 years for the trip of a lifetime. A 6-week solo backpacking trip through Southeast Asia. He's adventurous. He wants the authentic experience. So in a small town in northern Vietnam, he rents a scooter to explore the stunning mountain passes. He's careful, he's wearing a helmet, but sometimes that's not enough. A truck takes a corner too wide. A moment of panic, a screech of tires, and then darkness. Mark wakes up in a small rural clinic. The staff is kind, but the language barrier is immense. His leg is broken badly. He has a concussion and a sharp, persistent pain in his side that has the local doctor looking very, very concerned. They can set the bone. They can give him pain medication. But they cannot diagnose or treat a potential internal injury. They don't have the equipment. They don't have the specialists. Mark is alone in pain, thousands of miles from home, and facing a medical crisis that is far beyond the capabilities of his current location. The fear in that moment is unimaginable. It's a feeling of complete and utter helplessness. But then, through the haze of pain, He remembers the wallet in his backpack, and inside a small card with a phone number, the 24/7 global assistance line for his travel insurance. He gets a nurse to help him dial the international number, and on the other end of the line everything changes. He hears a calm, clear American voice. "This is the assistance center. How can I help you?" Mark explains his situation, and immediately a machine goes into motion. The assistance company gets their own medical director on the phone with the Vietnamese doctor, using a translator. They get the medical report. They confirm what Mark already suspected. He needs to be in a major international standard hospital, and he needs to be there fast. This is not trip interruption. This is medical evacuation. The insurance company doesn't just send Mark a check. They take over. They become his logistics team, his medical advocate, and his lifeline. They determine that the best facility is in Bangkok, Thailand. They arrange for a private ambulance to transport him from the rural clinic to the nearest airport. They arrange for a medically staffed commercial flight to get him to Bangkok. They have already been on the phone with the hospital in Bangkok, sent over his medical records, and arranged for his admission. All Mark has to do is focus on staying stable. The insurance company handles everything else. The bill for this one transfer, the ambulance, the medical flight, the coordination, could easily be $20,000, $30,000, even $40,000, and his policy covers it. Now, while Mark is being treated in this world-class Thai hospital, the other part of his policy is also at work. His trip is obviously over. He's going to miss his prepaid tour of Angkor Wat in Cambodia. He's going to miss his non-refundable hotel stays in Kuala Lumpur. He's going to have to forfeit his original flight home from Singapore. All of those financial losses? That's where trip interruption kicks back in. It will reimburse him for all those unused, non-refundable expenses. So you see how the two benefits work in tandem. Medical evacuation is the emergency service that saves his life and gets him to proper care. And trip interruption is the financial service that cleans up the monetary wreckage of his abandoned trip. But the story doesn't end in Bangkok. After a few days, the doctors stabilize him, but they deliver the news. The break in his leg is complex. He needs major reconstructive surgery and months of physical therapy. And it's best if he has it done at home with his support system. The problem? He can't fly home on a regular plane. He can't sit upright for 20 hours. He can't bend his leg to fit in an economy seat. And he needs medical monitoring during the flight. So, the insurance company gets back on the line. This next step is called medical repatriation. It's the second half of the evacuation benefit. It means getting you from a hospital abroad all the way to a hospital back home. They assess his needs. Maybe they can arrange for him to lie flat across a whole row of seats on a commercial flight, with a flight nurse accompanying him the entire way to administer medication and monitor his vitals. The cost for that kind of arrangement? Easily $10,000 to $15,000. But what if his condition was even more critical? What if he were on a ventilator or had a serious head injury? In that case, the insurance company would arrange for a private air ambulance. A small jet staffed with a full medical team, a flying ICU. The cost to charter an air ambulance from Asia to the United States is not an exaggeration. It can be $100,000, $150,000 or more. This is the million-dollar benefit you see listed on the policy. It is very real and it is used. It is the ultimate safety net. Now we have to talk about the final, most difficult scenario. What if Mark didn't survive the accident? This is every family's worst nightmare. In the midst of their grief, they are suddenly faced with an overwhelming and horrifically complex international bureaucracy. There are language barriers, legal requirements, and staggering costs associated with bringing a loved one's remains home. It's a logistical and emotional burden that is almost too much to bear. This is where the benefit for repatriation of remains comes in. The insurance company, with quiet professionalism and compassion, takes over this entire process. They handle the consular services, the legal paperwork, the preparation, the transportation, everything. They shield the grieving family from both the logistical nightmare and the immense cost, which can run into the tens of thousands of dollars. It is a deeply uncomfortable benefit to think about, but it is a profound act of service for a family in their darkest hour. So when you see those huge numbers on a policy, $500,000 for medical evacuation and repatriation, it's not just marketing. You're not buying a fund of money. You're buying access to a global network of emergency responders. You're buying a team of doctors, logistics experts, and crisis managers who will take over when you are at your most vulnerable. It's the difference between being alone and terrified in a foreign clinic, and knowing that a team of professionals is already dispatching a plane to come and get you. So let's pull back the curtain on what that actually looks like. The moment you or a travel companion makes that emergency call, you're not talking to a standard call center agent. You're connected to a command center, staffed 24/7 by doctors, nurses, and logistics experts. They immediately get on the line with the local physician treating you, not just to get a medical report, but to oversee your care. They're asking the hard questions. Is this facility equipped to handle this? Are they following the best standard of care? Do they have the right medication, the right specialist? If the answer to any of those questions is no, the wheels are already in motion. They are chartering a medically equipped jet. This isn't a commercial flight with a doctor tagging along. This is a flying ICU with a full critical care team on board. They handle everything: the flight plan, the landing permits, the ground ambulance on both ends, the communication with your family back home, and securing a bed for you at a top hospital in your home city. You don't see a bill for that $100,000 flight. You don't have to navigate a single piece of paperwork in a language you don't understand. Your only job is to get better. That is the profound power of a real travel medical policy. But there's a trap here. A massive, financially devastating trap that tens of thousands of Americans fall into every single year. And it all comes down to two words: pre-existing conditions. This is, without a doubt, the #1 reason legitimate claims get denied. And the way insurance companies define this is probably not what you think it is. You might think, well, I have high blood pressure, but it's totally stable. I've been on the same medication for 5 years. It's not a problem. Or, I have a heart condition, but my doctor cleared me for travel. In the cold, hard world of insurance contracts, that might not matter at all. Let me tell you about a guy we'll call Bob. Bob was a 68-year-old retiree, excited for a 2-month cruise through the Mediterranean. He did everything right. He bought a comprehensive travel medical plan with $1 million in coverage. He had a history of heart disease, but it was well managed. He felt great. 3 weeks into his trip, off the coast of Italy, he had a massive heart attack. He was airlifted to a hospital in Rome, where he spent 2 weeks in the ICU before being medically evacuated back to the US. The total bill was over $250,000. His insurance company denied the entire claim. Every single penny. Why? Because when they requested his medical records, they found that 2 months before his trip, his doctor had slightly increased the dosage of one of his heart medications during a routine checkup. Bob didn't even think about it. He felt fine. But to the insurance company, that tiny adjustment meant his condition was not considered stable for the required period before his trip began. That simple, routine medication change was the loophole they needed to void his coverage. Bob and his family ended up having to take out a second mortgage on their home to pay the bills. This story is heartbreaking, and it happens all the time. So let's get this straight. A pre-existing condition isn't just a diagnosed illness. It can be any condition for which you've had symptoms, received treatment, had a change in prescription, or even just sought medical advice within a specific time frame before you bought your policy. This is called the look-back period, and it's usually anywhere from 60 to 180 days. Think about that. Did you go to the doctor for a nagging cough a month before your trip? That could be considered a pre-existing respiratory condition. Did you get a new prescription for acid reflux? Pre-existing gastrointestinal condition. Did your doctor say, let's just keep an eye on this mole? That could be flagged. The bar is incredibly, and often unfairly, low. The insurance company's goal is to mitigate their risk, and they will scrutinize your medical history with a fine-tooth comb if you file a major claim. So are you just out of luck if you have any medical history at all? Is travel insurance a scam for anyone who isn't in perfect health? No, absolutely not. But you need to know about the single most important benefit you can get on a travel insurance policy: the pre-existing condition exclusion waiver. This waiver is your golden ticket. It's a provision that says if you meet certain criteria, the insurance company agrees to waive the pre-existing condition exclusion, effectively covering your existing medical issues as if they were a brand new sickness or injury that happened on your trip. So how do you get this magical waiver? It's not automatic. You have to qualify for it, and it's all about timing. There are typically 3 rules. First, you must be medically stable and able to travel when you purchase the policy. Second, you have to insure the full, non-refundable cost of your trip. You can't just insure your flights and hope for the best on your prepaid hotels and tours. And third, and this is the one that trips everyone up, you must purchase your policy within a very specific window of time, usually 14 to 21 days from the date you made your very first payment on your trip. Let me repeat that because it is life-changingly important. The clock starts ticking the second you put down a deposit on a cruise, book a flight, or pay for a tour. It's not from your final payment date. It's from the first dollar you spend. If you wait a month to buy your insurance, you will almost certainly be ineligible for the waiver. And if you're ineligible for the waiver, that policy you bought might be next to useless for the very thing you're most worried about. This is why you see all those pop-ups to buy insurance when you're booking flights online. They're trying to get you to buy within that critical window. Now, I'm not saying you should buy their specific plan, you should always shop around, but you do need to buy a plan, the right plan, within that 2 to 3 week window. This is a game changer. For Bob, if he had bought his policy within 21 days of putting the deposit down on his cruise, that change in his medication dosage wouldn't have mattered. The waiver would have been in effect. His $250,000 bill would have been covered. That simple and that crucial. Now, this applies to both comprehensive trip insurance policies and travel medical policies. The waiver is the key that unlocks coverage for your past medical history. But remember our core distinction. In a trip insurance plan, this waiver might cover you if you have to cancel your trip because your stable asthma suddenly flares up before you leave. But it's the travel medical plan with that same waiver that will give you the $500,000 medical evacuation benefit if that same asthma attack happens when you're hiking in the Peruvian Andes. The waiver is the key, but the policy it's attached to determines the size of the door it can unlock. So we've covered the catastrophic. We've covered the life or death evacuations and the treacherous maze of pre-existing conditions. But what about the far more common stuff? What happens if you get a nasty case of food poisoning in Thailand? Or you twist your ankle walking on the cobblestones in Prague? Or you lose your prescription medication somewhere over the Atlantic? These things won't cost you $100,000, but they can absolutely ruin your trip and still leave you with a hefty bill and a logistical nightmare. How does your insurance handle the everyday emergencies? What's the actual process for filing a smaller claim, and what can you expect to get back? That's where we're going next. Let's talk about the moment it actually happens. Not the helicopter on a mountainside drama, but the mundane, trip-ruining stuff. You're hiking the Cinque Terre. You misjudge a step on a slick stone path, and you feel that sickening white-hot pop in your ankle. It swells up instantly. You can't put weight on it. You're miles from your hotel, you don't speak fluent Italian, and you have no idea where the nearest clinic is. What do? Your first instinct might be to panic. Your second might be to Google "hospital near me." Both are wrong. Your first and most critical action is to pull out your phone and call the number. The 24/7 emergency assistance number provided by your insurance company. This isn't just a customer service line. It's your lifeline, your mission control, your fixer. Before you do anything else, you call them. Think of them as your personal travel concierge for chaos. You tell them, "I'm in Rio Maggiore, I've hurt my ankle, I need to see a doctor." They won't just say "good luck." They will have a network of approved, vetted clinics and hospitals. They will tell you, "Okay, there is a clinic in La Spezia 10 kilometers away. We can arrange a car to take you there. Here is the address. Tell them you are with us." This single phone call can be the difference between a controlled situation and a complete catastrophe. They can often arrange for direct payment between the insurance company and the hospital, especially for more significant treatments. This means you aren't slapping down your credit card for thousands of dollars and hoping for reimbursement later. For a smaller clinic visit, you may still have to pay out of pocket, but by going to their recommended facility, you're ensuring the paperwork will be what the insurance company expects to see. Now let's talk about that paperwork. From the moment the incident occurs, you need to transform into the world's most meticulous record keeper. The insurance company's default position is skepticism. Your job is to overwhelm them with proof. Get a detailed report from the doctor, in English if possible. If not, get the report anyway, you can have it translated later. Get an itemized receipt for every single thing. The doctor's visit, the x-ray, the crutches, the prescription for painkillers, the taxi ride to and from the clinic. Every single euro. Take pictures of the receipts with your phone immediately so you have a digital backup. If you don't have a receipt, it didn't happen. If you can't prove the expense, you can't claim it. This is the single biggest reason smaller claims get denied. Sloppy documentation. The process is similar for non-medical issues covered by trip insurance. Let's say you land in Tokyo after a 14-hour flight, and you stand at the baggage carousel watching it go from crowded to completely empty. Your bag is not there. Again, the first step isn't to panic. The first step is to go directly to the airline's baggage service counter before you leave the airport and file a report. You must do this. The insurance company will not even look at your claim for delayed baggage unless you have an official report from the airline with a file reference number. This is non-negotiable. Once you have that number, you call your insurance assistance line. You tell them what happened. They will explain your policy's specific benefits. Most policies have a baggage delay benefit that kicks in after a certain number of hours, say 6 or 12 hours. After that time has passed, you are covered for the purchase of essential items. And this is where people get tripped up. What is an essential item? A toothbrush, toothpaste, a change of underwear, socks, a clean shirt, deodorant. If you're on your way to a business meeting, a new tie might be considered essential. If you're in a cold climate, a warm jacket might be. What is not essential? A new pair of designer jeans, a fancy dinner to make you feel better, or a new camera because yours was in the bag. The key is reasonable and necessary. And once again, you must keep every single receipt. When you file the claim, you will submit the airline's report, the receipts for your essential purchases, and a copy of your flight itinerary. Your policy will have a per-day limit, maybe $150, and a total maximum limit, maybe $500. They will reimburse you for your proven, reasonable expenses up to those limits. Filing the actual claim usually happens once you're back home. You'll go to the insurance company's website, log into their claims portal, and begin the process of uploading all the beautiful documentation you so diligently collected. The police report for your stolen wallet, the airline's property irregularity report for your lost bag, the itemized medical bills for your sprained ankle. You will fill out forms that detail exactly what happened, when, and where. And then you wait. It can take weeks, sometimes a month or more, for an adjuster to review your claim and make a decision. This all sounds straightforward, but there is a monster hiding in the fine print of nearly every policy. It's the #1 reason major medical claims are denied. And it's a concept most travelers completely misunderstand. I'm talking about pre-existing medical conditions. You might think, I don't have a pre-existing condition. I'm healthy. But the insurance company's definition is brutally broad. A pre-existing condition is often defined as any illness, injury, or medical condition for which you received treatment, took prescription drugs, or got a recommendation for treatment or a new prescription within a look-back period before your policy started. This look-back period is typically 60 to 180 days. Let's play this out. 2 months before your big trip to Spain, you went to the doctor for some mild chest pain. He ran an EKG, said it was probably just anxiety, and told you to monitor it. You feel fine and you forget all about it. Then, in Madrid, you have a serious cardiac event and end up in the hospital for a week with a $90,000 bill. You file a claim. The insurance company, as part of its due diligence, requests your medical records. They see the note from your doctor 2 months ago about chest pain. Claim denied. Why? Because you received treatment and a diagnosis, even a minor one, for a condition related to your heart within the look-back period. That $90,000 bill is now entirely your problem. This is terrifying. Can apply to anything. That tweaked back you saw a chiropractor for. The asthma inhaler your doctor refilled. The blood pressure medication you've been on for 10 years. If your condition is not stable, meaning no changes in medication or treatment during that look-back period, any claim related to it can be denied. So, are you just out of luck? Is travel medical insurance useless if you have any medical history at all? No. There is a solution, and it is the single most important feature to look for if you have any health concerns whatsoever. It's called the exclusion waiver for pre-existing conditions. This waiver does exactly what it sounds like. It waives the exclusion. It forces the insurance company to cover your pre-existing conditions, just as it would cover a new illness or injury. But you can't just ask for it. You have to earn it, and you do that by meeting specific criteria. Typically, you must buy your travel insurance policy within a short window, usually 14 to 21 days, of making your very first payment for your trip. This could be your flight, your cruise deposit, or your tour payment. You also have to insure the full, non-refundable cost of your trip, and you have to be medically able to travel on the day you buy the policy. If you meet these conditions, the waiver is often automatically included in comprehensive plans. It is a game changer. It's the difference between peace of mind and the risk of financial ruin. It means that if your stable blood pressure condition suddenly flares up in Paris, you're covered. If your previously treated back goes out while lifting your suitcase in London, you're covered. Understanding the claims process, the importance of documentation, And the critical nature of the pre-existing condition waiver moves you from a casual tourist to a savvy, protected traveler. You now know the rules of the game. You know what to do in the moment of crisis, and you know how to navigate the bureaucratic maze afterward. So now you know how these policies work in the real world. You know the mechanics of making a claim and the biggest trap to avoid. But this brings us to the final, most important question. With hundreds of policies from dozens of companies, all with different limits, exclusions, and benefits, how in the world do you choose the right one for your specific trip? How do you compare them side by side to find the one that gives you the best protection without paying for coverage you don't need? That's the final piece of the puzzle. And the key to unlocking it is to stop thinking about buying a plan and start thinking about building a profile. Your personal trip profile. This is the method savvy travelers use to cut through the noise. It's a simple three-part framework that makes the right choice almost obvious. It's based on you, your destination, and your money. First, let's build your traveler profile. Who are you on this trip? Are you a 25-year-old solo backpacker heading to Thailand, in perfect health, planning on riding scooters and hiking? Your primary concern is probably a sudden, catastrophic accident. You need a high medical maximum and robust emergency evacuation coverage. You don't need a ton of bells and whistles. Or are you a family of 4, with a 5-year-old and a 9-year-old, heading to an all-inclusive resort in the Caribbean? Your risk profile is different. Kids get ear infections. They fall and need stitches. You'll want a plan with a low deductible, maybe even zero, so you don't hesitate to see the resort doctor for something minor. Maybe you're a 68-year-old couple on a 2-month European cruise, and one of you has a managed heart condition. For you, the single most important factor is the pre-existing medical condition waiver. You need to ensure that if that managed condition flares up, you are 100% covered. The policy you choose must have that waiver, and you must buy it within the specific time frame, usually 14 to 21 days after your initial trip deposit. Your traveler profile dictates your medical priorities. Age, health status, and travel style are the pillars. Be honest about them. Second, the destination profile. Where in the world are you going? This is not just about geography. It's about the healthcare landscape. Let's imagine 2 different trips. Trip A is a week in Zurich, Switzerland. The healthcare there is among the best in the world. Top-notch doctors, pristine hospitals. But it is astronomically expensive. A broken leg could easily cost you over $50,000 out of pocket. For this trip, your focus is a massive medical maximum. A plan with a $100,000 limit might feel safe, but it could be wiped out by a single surgery. Here, you're looking for plans with $500,000 or even $1 million in coverage. Medical evacuation is less of a concern because you're already in a place with excellent care. Now consider Trip B, a 2-week trek through a remote part of Peru. The local clinics might be able to handle a minor cut, but for anything serious, a bad fall, a severe illness, you need to get out. You need to be flown to a major hospital in Lima, or maybe even back to the United States. For this trip, the single most important number on the policy is not the medical maximum, but the medical evacuation limit. You need at least $500,000, if not $1 million, in evacuation coverage. This is the money that pays for the private air ambulance, the medical staff, the logistics to get you from a remote mountainside to a world-class ICU. A plan with a huge medical benefit but only $50,000 in evacuation coverage is useless to you here. So analyze your destination. Is the risk financial due to high-cost healthcare? Or is it logistical due to remote or underdeveloped infrastructure? Your destination profile determines your coverage priorities. Third and finally, the financial profile. This is where we look at the trip itself. How much non-refundable money is on the line? This is the part that defines whether you need a comprehensive trip insurance plan, or if a simple travel medical plan will suffice. If you booked a last-minute flight to visit family for $400 and you're staying with them for free, your financial risk is low. If you have to cancel, you're out a few $100. Annoying but not life-altering. For this trip, a standalone travel medical plan costing maybe $30 or $40 is a perfect fit. It protects your health, which is the biggest risk, without forcing you to pay for cancellation benefits you don't need. But what if you've spent the last 2 years saving for a $15,000 honeymoon to the Maldives? You've put down non-refundable deposits on the overwater bungalow, the seaplane transfer, the special excursions. Your financial risk is massive. If your partner gets sick a week before you leave, or your boss cancels your vacation time, or a hurricane heads for the islands, you could lose everything. This is a scenario built for comprehensive trip insurance. You need to ensure the full, non-refundable cost of your trip. The cost of the policy will be a percentage of that trip cost, but it protects your entire investment. And this is where you might consider the ultimate upgrade. Cancel for any reason or CFAR. It costs more, but it's a financial safety net that lets you cancel for reasons not listed in the base policy: a breakup, a sick pet, or just plain changing your mind, and still get back a significant portion, usually 75% of your trip cost. Your financial profile tells you how much protection you need for your investment. So now you have your 3 profiles: traveler, destination, and financial. You're no longer just a shopper. You're an architect. You're building your own safety net. With this clarity, you can now go to a travel insurance comparison website. These sites are your superpower. Do not buy directly from an airline or a cruise line. Their plans are often overpriced with mediocre coverage. Go to an independent marketplace where you can see dozens of plans side by side from reputable underwriters. Here's how you use it. You'll enter your age, your destination, your trip dates, and your total non-refundable trip cost. And instantly, you'll get a list of 20, 30, maybe 40 different plans. Don't panic. This is where your profile comes in. On the left side of the screen, you'll see filters. Use them. This is how you cut through the garbage. Are you that 68-year-old with a heart condition? The very first filter you click is pre-existing condition waiver. Boom. Half the plans vanish. Now you're only looking at plans that work for you. Are you trekking in Peru? Go to the filters and set the medical evacuation minimum to $500,000. Poof! More plans disappear. Are you on that family trip to the Caribbean? Filter for plans with a $0 deductible. You see how this works? You're not randomly reading policies. You're using your profile to eliminate everything that doesn't fit your specific needs. You're left with a handful of high-quality, relevant options. Now you can compare those 3 or 4 plans on the things that matter. Look at the medical maximums. Look at the per-person cost. Open the full policy details for each one. Don't just read the marketing bullet points. Click on the link that says policy wording or description of coverage. Yes, it's a long PDF, but you don't need to read every word. Use the search function. Search for exclusions. What isn't covered? Many plans exclude adventure sports like scuba diving or rock climbing, unless you buy a specific rider. Make sure your activities are covered. Search for the exact terms of the pre-existing condition waiver. Understand the rules. This process, from building your profile to filtering and comparing, might take you 30 minutes. But those 30 minutes can be the difference between a minor inconvenience and a 6-figure medical debt. It's the difference between losing your dream vacation fund and getting a full refund to rebook it later. The cost of travel insurance is not an expense. It is an investment in peace of mind. It's the ticket that lets you step onto that plane, climb that mountain, or sail that sea with the quiet confidence that you've handled the what-ifs. You've taken responsibility not just for your adventure, but for your well-being. So before your next trip, don't just pack your bags. Build your profile, compare with purpose, and travel not with fear but with freedom.